Hello and welcome. This is Abhinav, and this is part three of the four-part video series that I'm doing on the US taxation of non-resident aliens. In the first part, we discussed about the basic tax rules of US tax on non-resident aliens. Second part, we discussed about the impact of DTA and some special rules regarding the residential status. This is the third part where we are discussing the withholding tax obligations of the payer of income to the non-resident alien. So if you are a say a Indian resident who has returned from US, you qualify as a non-resident alien unless you hold a US citizenship or a green card. So, what are the withholding tax obligations with respect to the income that you earn in US? Let us discuss on that. Right. So, when you talk about US persons, which are like US residents, US citizens, green card holders, there is no withholding that generally applies. However, there is a provision for estimated payments, like we have TDS from salary income. Similarly, for US residents, there is a provision for estimated payments from salary income. And there is also a provision of 24% backup withholding tax if the person is a US person and there is no ITIN SSN on file. So the payer of the income in US has to deduct a 24% backup withholding tax and deposit it with the IRS, right? So that is for the US person. Now, however, for the non-resident aliens, US tax law requires a flat 30% withholding on the gross amount, right? Require a payer of income to withhold an amount on the gross amount of taxable FTAP income at generally flat 30%. So in the previous videos, which in the part 1 we discussed about two types of incomes, which is one is the ECI, effectively connected income, which is taxed like a normal as to a US resident. Second is the FTAP income, fixed determinate annual periodic. So there is a flat 30% tax withholding obligation on the payer of the income, which may be a US broker or a US employer. Right? Now, there is another set of withholding rates which apply on US real property sale. So if you sell a real estate in US, and then there is so then the rate for a real property sale is different from the 30%. That is called FIRPTA withholding, FIRPTA, Foreign Investment in Real Property Act, FIRPTA withholding, section 1445. Now, what the provision says is that if the buyer has acquired the property for residence, right? Whoever is the buyer, he has acquired the property for residence, and the amount involved in the sale is less than or equal to 3 lakh USD, then there is no withholding that is required. So that is first thing. Second is same situation, but it is 3 lakh to 10 lakh USD, then 10% withholding. uh, then if the amount is more than 10 lakh, it's 15% withholding, right? So generally withholding rate is 15%, but this is basically the tax brackets, right? So there are final rules that are applicable, so you can check that, but generally these are the rates. However, payer can withhold at a lower rate or a zero rate. Now, this is where the documentation comes in picture. That the rate applicable uh, on a non real property sale is 30%. However, if the person who is receiving the income provides a documentation to say that I am a resident of so and so country, and under the DTA between US and that country, a lower rate applies, so then the payer of the income has to deduct the tax at that lower rate, right? So payer will withhold a lower rate or a zero rate if the documentation proves that the payee is US person, because if it's a US person, then generally there is no withholding. Second is a zero or reduced rate if it is allowed under a treaty and the payee is proves that he is the beneficial owner of the income, right? Okay. Payer needs to file 1042S to the IRS by March 15th of the year following the year of withholding and provide the copy to the payee. So when the payer of the income deducts the tax. He deposits it to the IRS, files this form to the IRS, also gives one copy to you as a payee. You need to preserve it, because if you are filing a 1040 NR, you this is the proof that the tax has been deducted, withheld. Now, what are the documentation to claim zero or lower withholding rate, which you need to provide it to the payer, right? So W9. Now, W9 form is to be used if you are a US person, right? If you are a US person, you need to please understand, if you're not a US person, you should never provide this form. If you're a US person, then you have to uh, provide your US TIN or SSN on that W9. And if you provide that, then generally there is no tax withholding. Second, and which is a very important thing, and generally which is used and which I talk about in a lot of videos on 401k and all, W8BEN. This is the form where a non-resident alien, for example, a person who is an Indian resident, is claiming a reduced rate or exemption under the treaty. For example, on dividend, the FTAP rate, withholding rate, is 30%, and you want to claim a reduced rate of 25%. So you have to provide W8BEN document to the US payer, the US broker, to withhold that reduced rate. W8BEN is again the same as W8BEN, but it is used by entities like corporates, partnerships, and all. W8ECI. Now, this form is to be used if you have income, say a rental income. You are an Indian resident, you have rental income in US, right? Rental income in US, which otherwise by default qualifies as FTAP income, subject to flat 30% tax on the gross amount. If you want to elect it under section 871D of the Internal Revenue Code as ECI, and which is a beneficial election, because electing something electing it as an ECI allows you to claim the deductions for the expenses. Then whoever is paying you that income, right, which is either your tenant or whoever, you can provide this W8 ECI form, and to qualify it as ECI, and that person may not withhold the tax on this payment. Then W8 EXP, this is for use by foreign governments and tax exempt organizations. Then there is a form 8233. Now, 8233 is not as such a withholding documentation, but this is the documentation that you need to provide in case you are a non-resident and you have done any personal services, like either independent personal services or a dependent personal services like salary income from US employer, right? Then you need to provide this form and not W8BEN. This is the form you need to provide in order to claim an exemption, right? Now, how generally where it is used is where if you're an Indian student who qualifies as a non-resident and who generally does some part-time work, then they can provide this form to the US employer to claim the deductions, the standard deduction, and accordingly a lower withholding, not an exemption, but a lower withholding from the personal services income that they get. Okay. Okay. Now, if the non-resident is married to a US citizen and elects as a resident, which we discussed in part 2, that election can be made, even if the person does that election, still these withholding rules apply. Okay. Now, sale of a U.S. real property interest, like for example, you sell the uh, house property, and there are separate withholding rates that we discussed under FOPTA. That also includes shares in a corporation which holds real property. So, example, you hold the real property in an LLC, and that LLC is qualified as a real property corporation. So, if you sell the shares in that LLC, still the buyer of the whoever you have transferred the shares has to deduct the withholding tax as per the FOPTA rates. The exception to this is if it's a regularly traded stock, in which case the withholding will not apply. Okay, payer needs to disregard the documentation if he has reasons to know, right? So if you provide a documentation to the payer and the payer has the right to disregard the documentation if it has reasons to believe that it cannot be relied upon. While there is a several criteria that is listed, one of the very common criteria is that if you have a US address listed in that documentation or in the account information, right? So, or a non-treaty country address, right? For example, you were living in the US, had a brokerage account with, say, whatever, Fidelity, and then you came back to India. You still have a US address in your account. You have not updated. In that case, the broker has the right to reject the W8BEN, if, because this is one of the criterias, because the address is still the US address, right? Or if you have an address like for some other treaty country like Bangladesh, and you are claiming the benefit under the India US treaty, so that will be a problem. And if the documentation is either not available or unreliable, then what the sorry, it's payer. It's payer, not pay. So the US law requires the payer to rely on certain presumption rules. Basis that presumption rules, they will have to do the withholding, right? So the course of action for people who are returning back from US is always, and that's, I've talked about this in earlier videos also, that please first update your non-US address, that is your Indian address, in the account after leaving the US, and then supplement the documentation, uh, whatever W8BEN that you provide, with the evidence of Indian residence proof or citizenship, which is the best thing is Indian passport. If you have the address updated in the passport, then you can provide that. That will be like a conclusive proof to the payer of the income that you are an Indian resident, and they should deduct the, they should give you the benefit as per the DTA. That approach is the correct approach. Even if still the payer of the income deducts at 30%, then you don't have any option but to file a 1040 NR to claim a refund, right? So if excess tax was paid, file 1040 NR to recover it. I have checked my part 4 video where I have discussed at length about 1040 NR issues with filing 1040 NR. The only practical issue with if you don't have an ITIN in US is the time you have to actually apply for an ITIN along with the 1040 NR in form W7, and it takes a lot of time by the IRS to issue the ITIN to you, and till that time the 1040 NR doesn't get processed. So there are practical issues around that. Okay, for property sale, you can apply for a lower withholding to IRS. Like we have in India, you can apply for a lower rate in Form 13 to the assessing officer. Similarly, in US also, you can apply for a lower withholding certificate to the IRS. Please check how much time it takes to get the letter. Also, please check marketability issues with respect to uh, the selling the property as a non-resident. So check that particular, and also the logistical challenges if you are keeping the property back in the states after returning to India and then selling it. Please preserve form 1042s 1099s as applicable for later inquiry by Indian tax authorities or US tax authorities. Please preserve these forms. Okay, so this was it. This was it. This is part 3 where we discussed the withholding tax implications. If you have any questions, comments, feedback, please do mention in the comment section. Stay tuned for part 4 video, which will be the last video for this series. I talk about 1040 NR tax filing for non-resident aliens. Thank you so much for watching this video. Bye.